So if we can go to the next slide, let's take a quick look at what we're going to be doing today. As Raul mentioned, last week we gave you an introduction to credit cards. I will go over some of the basic information in just a minute, but what we're going to focus on today is how to manage a credit card. In other words, what kind of information does a credit card company give you? And then what do you do with it so that you can feel comfortable in the management of this important financial asset? So with that, let's move on to the next page. And this is the review of last week's presentation. If you remember, we talked about what a credit card is, and the answer is it's a way to pay electronically. You actually buy now the purchase at the store, but you don't pay for it until later when you get the bill. So who is paying for it? It's the credit card company, which means that what you have with the credit card company is a short-term loan. And you will get that bill from the credit card company and pay it back when you get it. Importantly, this credit card is not actually connected to your bank account. It's independent of your bank account. It's not a debit card, in other words. Now, who provides credit cards? The answer is a lot of different companies. Banks do, credit card companies do, and many stores also provide credit cards. We talked about who should get a credit card, and the simple answer is people who have regular income and people who have good credit histories. And what does that mean? Most importantly, it means that people who are good at paying off and paying down their bills when they get them. Why might you want a credit card? As Anne mentioned last week, it's very helpful if you want to develop a credit history. It's a place where many of us start. It's a very helpful tool, especially if you have an emergency and you may not have exactly enough money to cover that emergency. A credit card can help you. It's a great way to track expenses because each month you get a list of every charge that you use with your credit card. And finally, there are a number of credit card companies that offer you what are called rewards. These are, whether it's in dollars, in miles, in stuff, they're little rewards for using your credit card. On to the next slide, please. We talked a little bit about advantages. The extra time you have to pay for something because you don't pay right away, the credit card company does. It gives you the beginnings of a good credit history, we hope. And a credit card is usually well protected against fraud and loss. And in fact, credit card companies are usually very busy monitoring their credit cards. So you may get a notification from the credit card company when they notice something that is unusual. And you will have to respond back that, no, that was me. So they're very attentive, and that's part of this protection. Disadvantages. A famous and well-known disadvantage is it's very easy to overspend. It's so easy to buy with a credit card. Everyone realizes also that credit cards come with fees and high interest charges if you don't carefully manage that line of credit. And if you don't actually manage that line of credit well, you could end up with a bad credit history. So that's why we're going to spend a fair amount of time today on the management of the credit card. We talked about features, spending limits, or what's called the credit line, fees and interest, and I'll talk a little bit more about that in a minute. And then, of course, the rewards and introductory offers. Credit card companies want your business, and this is one way that they try to attract your business. What are the types of fees? We talked about the annual fee, which some credit card companies ask you to pay a fee just to have the card. But there are also, if you do not pay on time, late fees and penalty fees. And if you don't pay your full balance, there will be interest charges on what is left of that you have not paid off. So a number of fees needs careful management. Types of interest charges, we talked about the introductory rate. This is sometimes a lower rate that will get you to apply for that credit card, use that credit card, perhaps overuse that credit card. The APR, which is the annual percentage rate, as we mentioned last week, very high. It's around 17% right now. I checked my credit card statement today. Penalty rates are even worse. If you don't pay as asked, that's up around 30% right now. So very, very high costs if you don't follow the rules of the credit card company. We talked last week about rewards programs, miles, cash, merchandise, lots of ways of getting rewards, which will not be rewards if you do not use this card wisely. So you have to, again, manage that. And finally, already touched on the introductory offers, which give you a short or a temporary benefit, whether it's lower fees, lower interest rate, or some kind of reward. Okay, so that was a quick walk through what we talked about last week. And so today, we're gonna zero in on a lot more detail of what credit card statements look like and what they tell you. And then importantly, how do you manage that information? How does that tie in with this thing called a credit score and a credit report? We'll tell you a little bit about those. And then we'll give you some pointers on how to avoid fees, how to avoid penalty interest rates and interest rates in general. And finally, a little bit on what you do if your credit card balance gets too big. Okay, so. Okay, you're going to see right in front of you now a very frightening long list of vocabulary terms. Please do not panic. As Raul mentioned, you're going to get a copy of this presentation. What we wanted to do on this page and the next page is lay out all of the different terms, all of the different vocabulary words that a credit card company may have on your credit card statement. So when you look at your credit card statement or bill, you will know where to look. In other words, if you look at this top bullet, it says reward summary. And you can see that reward summary on your credit card statement. You can come back to this PowerPoint and say, oh, okay, it's information about the card's reward program, and so forth. So all of these blue bullets are all the different terms, vocabulary words, if you will, that credit card companies use. And they're going to tie into our presentation, which Anne is going to start to walk you through as far as what does a credit card statement look like and what does it mean. Okay, Anne.
All right, thank you, Bob. So this slide shows us what a typical credit card statement may look like. Yours, if you have one, may not look exactly like this, but most of the information that is contained on this page, on this slide, is the kind of information that you will find somewhere, maybe not in this order, but somewhere on your credit card statement, okay? So they don't all look exactly alike, but this is a fairly typical one. And as Bob mentioned, a lot of the headings, like if you see where that number 1 is with the circle around it, account summary, if you look back when you get the PowerPoint presentation in your email from Raul, If you look back at the previous slides, you will see that it explains to you in great detail what an account summary is, and so on and so on. Okay, so I am going to go through the main pieces of this credit card statement on the next few slides. I will not be explaining every single little piece to you. That would be rather a lot, but I'm going to explain to you some of the more key pieces, okay, so that you know what's important to look for. All right, and please feel free to ask me questions as you go along. All right. So on this slide, we have several pieces. We have the account summary in bold there. Underneath it, we have the rewards summary. And on the other side, we have the payment information. Those are the main pieces on this page. So the account summary is really quite important. It's sort of an overview of everything that has happened on your credit card account since your last statement. Okay, so usually in the previous 30 or 31 days, this will be what happened. And if you look down, you'll see various headings, previous balance. So hopefully that will be 0 because you will have paid everything off last month and there will be no balance brought forward, but there may be a balance. And then it will tell you payment credits. That means how much you paid last month. Purchases. This is the total of all the purchases, okay? This is not the individual purchases. This is just the total. And that would be everything that you bought this month all added up together as a charge, okay? And then there will be some other things, but essentially this whole listing tells you everything that happened on your statement in the past month. This will also be a place where, say that you return something. Say I bought, that hat that I thought was just gorgeous last month. I got it home and I was like, oh dear, red just does not suit me. I'm going to have to return this. So if I return it, the credit to my account for the money that I get back for returning that item may be on my statement this month, which may be a month after I purchased it, okay? Because it took me a week to take it back. So credits may appear on here too if you've returned something. Okay, so the account summary is important. You'll see next to that, there's payment information. This is really important. This shows you your new balance. That's the most important thing on this statement is what you now owe. And then it will tell you, as we discussed last week, the minimum payment that you may make in order to avoid fees. That'll be late fees, okay? So the payment due date, you'll get a late fee if you pay it after that due date. And if you pay less than the minimum payment due, there'll be penalty fees, okay? Not to mention there'll be interest if you don't pay your balance in full. So if you only make the minimum payment due, there will be interest, as Bob just said, on what you didn't yet pay, but you still owe, okay? So this little piece of it is very important. And underneath, there are some other, more detailed points about these payments and payment being due. And it will tell you, late payment warning, this is what's going to happen if you don't pay on time. And please remember, if you're sending a check in the mail to pay this bill, you have to allow a few extra days. Okay, the post office is actually taking longer and longer to deliver mail, I believe. Seem to be getting my seems to be taking longer anyway. So make sure that you allow enough days for your payment to get there, because usually it's not the date that it's postmarked, it's the date that the credit card company actually receives your payment. Okay, so if it says, pay by the 12th, you probably need to allow a good few days, maybe a whole week, and send it off on the 5th. Okay, you can't just put a check in the mail the day before. It won't get there in time. All right, and then if we go across to where it says reward summary, this is the part we all love to look at, because hopefully this shows us that we have some good rewards that we have earned. And it's really fun to look at that piece and go, oh, I have a little cash back coming to me. And you can either redeem it, which means that you actually get it, or you can hold it over or just keep it until the next month. Okay, so you need not get that reward right now, but this gives you like a little running balance of what reward is due back to you and what you've earned this month. Okay, number 6, if you see at the bottom there, is important changes to your account. This usually won't say anything at all. And again, I missed out number 4, but if we go over to the other side and look at number 4, that little table with all the boxes there, I don't usually look at this too closely. It's only going to be important if you start not paying the whole balance and if you start accumulating a lot of money or debt that you owe. Okay, because then this tells you the bad consequences of that. This will say if you only pay this much, it's going to take you this long or this many months to pay off your balance. Okay, and you will see from that some very high figures if you start regularly not paying your balance in full. All right, so there's a couple of pieces on this statement that are very important. And let's look at the next slide where we'll see some other pieces. So this one shows you a different part of the statement. This is what's called the payment coupon. So that word coupon just means that this is the piece of the statement that usually you just tear off and you put in the envelope with your check. Okay, so this has some of the same information, the payment due date, the new balance that you owe, and the minimum payment that you owe. So this is information that was on that previous page. But what you do is you fill in underneath. You see where it says $sign and then there's a big blank line. That's where you fill in how much you're actually paying. If you're managing your credit card well, that's going to be the same as the new balance above. That's going to be the whole amount you owe. If you're not managing so well, it's going to be at least the minimum payment figure and hopefully even more than that. Okay, I do just want to point out, you don't have to pay either the minimum balance or the full balance. You can pay anything in between. Okay, so you must pay at least the minimum balance, and the most you pay obviously is the whole balance or the new balance. All right, and then this coupon is what goes in the envelope that they send you with your check at least a few days before it's due. All right, does anybody have any questions so far? Because I know this is quite a lot, but you can certainly go back over the slides later. Okay.
So Anne, I just want to say one thing, that if you are not sending checks in the mail, you still need to look at this section. And if you're going to pay electronically, like if you do electronic banking of any kind, you still want to make sure that you are paying on time and that you're paying at least the minimum and hopefully the full amount.
Absolutely, yes. So you can pay it however you would like to. Electronically is quite a good way, and you can make an automated payment, which means it automatically comes out of your bank account. But if you do that, then you have to be sure that when you get this bill, you're going to have enough money in your bank account to actually pay it. Okay, so that's another thing to look for. So if we go on to the next slide, let's look at the next piece. So the piece that says account activity, which is that circle with the number 8 in it. This is also a very important piece for you to look at because this shows all the details. So remember on the first page where we had the circle and the number 1, we saw the summary of everything. Now we see the details that make up that summary. So on here, you will hopefully have kept all the individual receipts that you got when you spent money during the months. So when I went into, let's say, Starbucks and I paid by credit card, they would have given me a receipt. When I went into Macy's, they gave me a receipt for that hat that I bought. So you're going to keep all those receipts. And then when the statement comes, you're going to check off all those receipts against the statement on this page where the detail is to make sure that all of these charges belong to you. Okay, so you want to be absolutely sure that every single charge on here is indeed something that you spent. If there's something on here you don't recognize and you say, my goodness, I never went into Macy's and I certainly never would have bought a hat, then you call the credit card company and you say, I don't believe this charge is mine. And they will remove that charge for a while they look into it to determine if it was indeed your purchase and you just forgot about it, or whether in fact it was fraud. Okay, so it's very important to look at these things before you actually pay the bill, because you want to query anything that you don't recognize or that you think is not yours as soon as possible. All right, but this is the part of the statement where you will do that. So everything will be on here, including, as I said before, if you return something, the credit for that will be on here. So make sure that everything is here and make sure the amount is correct. And this is the place that if there's anything wrong, you query it straight away. Okay. And number 9 down the bottom, this just tells you some of the totals. So total fees charged for the year and total interest charged for the year. And again, repeating what Bob said, you really would like those boxes just to be zeros, but you will soon see those fees and interest start to be quite large numbers if you don't manage your account well, and you end up having to pay those, okay? And this little box, which tells you how much those come to in the year to date, can be a horrible shock if you let this keep happening, that you don't pay on time and you don't pay the, the balance in full. Okay, so hopefully you'll never need to look at those boxes, but if you do, this is a good reminder to try not to incur those fees. All right, and on the final slide, this is the final statement. And again, this is something we hope you will never have to look at, but this breaks down all the interest charges that you have occurred in the month. Okay, so again, this is a horrible page to have to look at, and the figures can get quite big if you don't manage your statement well, but hopefully most of you will never even have to look at this section because it is all about the interest that they've charged you. Okay, so that's in brief. I know it was a little bit quick, but I hope it was a thorough enough look at what pieces of your statement are important to look at and which ones might be relevant to you. So does anybody have any questions about the statement before we go on to the exciting world of credit scores? All right, so back to Bob.
Okay, let's think a little bit about what's called a credit score. We've been using that term. Let's define it. It's quite simply a number, and the number is showing how well you manage to pay back loans. Normally, when somebody refers to a credit score, what they're talking about is what's called a FICO score. That's the most frequently used measuring system. And it's usually a system where the range is 300 points to 850 points. There are some other scoring systems. They are not as widely used. So it's much more likely that if you hear somebody talking about a credit score, or if you want to know about your credit score, the quickest and easiest ones to find out are the FICO scores. So why does this matter? Well, a good credit score makes it easier to get a loan. And it also means, if you have a good credit score, that you will get a lower interest rate, or more likely to get a lower interest rate on that loan that you want. So again, a credit score that's higher is going to benefit you. So that's why we're going to spend a little bit of time talking about what credit scores are and how they link to managing your credit card. So what are good and bad scores? Above 670 is a good rating, and below 580 is a poor rating. So let's go on to the next slide to talk a little bit more about what this all means. That is the score. It's just one number, but it gives any lender an idea, a rough idea about how you manage debt. It has nothing to do with how much money you make, okay? It's all about how well you pay your bills. Now, a credit report provides a little bit more information beyond the score. What it is a summary of borrowing and payment history. It shows your current credit situation. In other words, where you owe money, what you owe money on. And it's also showing how well you pay back loans. So in other words, I went out and I looked at my credit, asked for a credit report last evening. And what I saw was, in effect, a list. And I zeroed in on one because it said such and such credit card. And then it said $505 or something like that. And it said never late. And I thought, I wonder what this is. And then I realized I just got a bill from my credit card company. I wonder if that is reflecting the bill. And yes, the credit card company sent me a bill for $505, and there it was already on my credit report. So these are very current. This is very current information. Never late meant that as far back as this credit company reporting system is tracking, I have not been late in paying on this credit card. So think of the credit report as just a list of what you owe and whether you've been late or not. But it will also tell you that number, which is called the credit score. So where do I get the credit report and the credit score? Well, there are three well-known companies that provide this information. Their names are Equifax, Experian, TransUnion. Those are the three big ones. And you can go to the websites of these companies and ask for a credit report. You could also go, and this is what I did last night, I went to annualcreditreport.com, and there it's a website that says, well, which one of these three reports would you like? And I think I picked Experian. And so, of course, they brought up the Experian website, and then I was asked for some information and I got my credit report. So it's relatively simple to request one of these reports. It's not, they don't ask a lot of information. They're sharing the information they have, but they need to know who you are, where you live, and so forth. Now, your credit card company might also offer some kind of information relative to either your credit report or at least your credit score. My credit card company doesn't, Ann's does. So this is all about the credit card company. It's not necessarily the case. Importantly, you can request a report from one of these companies, Equifax, Experian, TransUnion. You can request a report once a year for free. So if you'd like to just find out once a year, just pick one of these, and once a year you ask. If you'd like to know more frequently, you're going to have to pick a second company if you want the report for free. In any case, you'll have to keep in mind that while these companies are using similar systems, they may not have exactly the same number for you as another company, but they're very close. They're using similar methodologies, similar ways of deciding what kind of a score you should have. And to that point, let's go to the next slide, because here are the factors the rating agencies use to come up with your credit score. Probably the most important one is, do you pay all of your bills on time? That is probably the biggest factor in a good credit score. And what they will, all three of these companies are going to emphasize, okay? A second factor is how much of a credit line are you using? So if you want a good credit score, don't spend more than 30% of your credit line. In other words, if you have a credit line of $1,000 for your credit card, don't spend more than $300 regularly, okay? Because the more you're using that whole line, the more you run the risk of not being able to pay off all of that on time. And that's what that rating agency is monitoring. A third factor, manage your loan payments well. It ties into that top bullet, but we're talking about all of your loans, not just your credit card, but that's important. If you have a car loan, if you have a mortgage, if you have a student loan, those are all different examples, all different uses of how you are using money, how you are managing debt, and how you are making payments on time or not. So that history is going to be monitored by the rating agency. And keep in mind that late payments or missing payments, when you fail to actually pay on one of these loans, is going to be indicated on your credit report, and that may stay on your credit report for up to 7 years. So if you miss a payment and you think, oh, well, it was last month, it shouldn't be, I won't have a problem with this anymore, it will stay on your credit report here, even if it was only for 1 month, okay? So it's important to establish that consistent payment history. That's what the rating agencies like to see. A few other issues that these rating agencies are watching are, do you stay with the credit card you have? You should. That's, again, you're managing that credit card, you're managing it well. Don't change cards. Some people change credit cards because they think they're going to get a better deal, or they think it's a way of spreading out the loans and somehow the rating agency isn't going to notice. They will. So it doesn't benefit you as far as a credit score is concerned to switch cards. And finally, don't get a lot of new accounts for 2 reasons. In the first place, if you get new accounts, the likelihood of using those accounts and perhaps ending up with more debt than you can manage increases. And just the difficulty of keeping track of your many increased number of accounts makes it more difficult to just manage. So just from a practical perspective, if you've got a credit card here and a credit card there, and you have to be juggling which ones do you pay and when do you pay them, much more likely you're going to miss a payment because you forget. We're all human. So these are the factors that these rating agencies are going to take a look at when they're thinking about and running their system for how to come up with your credit score. Are there any questions on this before we move on to actually managing a credit card? Okay, I'm not seeing any waving hands, so let's just get into then good ways to manage a credit card. You probably will not be surprised to hear, always pay all your bills on time. If you do that, you will save yourself a lot of anxiety and hurt. It's just because credit cards are expensive when you don't pay the balances, If you just pay those bills on time, you solve 90% of the problems that most people have with credit cards. Now, to avoid fees and interest charges, pay your balance in full each month. To Anne's point earlier, that balance number, while you can pay the minimum, when you pay the whole balance, this solves a lot of problems. Pay on time, yet again, as Anne mentioned, that means you avoid the penalty fees. And then, as she also mentioned, consider automatic payments. This is automatically being the payment from your bank to the credit card company. Just keep in mind that, of course, if you don't keep enough money in your bank account, that is not going to help. So I love automatic payments, but you always have to remember that an automatic payment is only automatic if there's enough money in your account to make that payment. So it does matter that you have to pay attention to that bank account too. Okay. To avoid that big balance, what do? Only buy things you have money to pay, where you have the money to pay for it right now, or you know that you will have the money by the time you get the bill. There are some times when you know, okay, I don't have quite enough money to buy this if I had to write a check, but I'm getting paid on Friday. It'll be okay. That makes perfect sense as long as you pay attention to how much you're charging on your account. It really helps if you think about only buying the things you need. The biggest trouble with a credit card is it's so easy to buy. So it's a good discipline to just say, do I need this or do I want this? And what will help you is if you think, don't spend more than 30% of my credit line. That's my limit. Of course, most of us are going to do more than 30% from time to time. I mean, the holidays are coming up. I know I'm going over 30%. But it's still something to remind yourself of, because that's helping you control your spending so that you are able to stay within the amount of money that you're earning. So keep that 30% benchmark in the back of your head as you think about managing this credit card. Now, as we've talked about before, if you choose a card with good rewards, such as cash back, that can be a helpful way of paying for things a little bit more easily. What we would always caution you, don't get a credit card that is in effect encouraging you to spend more because you want the reward. But the problem is, then if you can't pay the balance, what good is that little reward relative to the interest that you're now paying on what you can't pay off completely? That's the trade-off, and that's the trick to managing a credit card. And so to that point, be very careful of those low interest introductory offers. And of course, we would advise always pay off the balance so you don't have to think about your interest charges at all. Okay, and let's go on to one more slide on this topic, which is, okay, it happens. What do I do if I get into trouble with my credit card? My balance is big, very big, and I can't afford to pay it all. What do I do? Here are some basic strategies, very basic. Okay, first of all, pay off as much as you can as soon as you can. Certainly do whatever you can to pay that minimum to avoid the additional fees. But as Anne mentioned, you don't have to pay it all off. If you can only pay the minimum plus $1, add the dollar. Importantly, what you're going to have to think about is, what is my plan to pay this debt down as quickly as I can? And usually people are going to have to sit down, take a look at what they're earning and how they're going to start thinking about what they're spending money on. If you need to, think about credit counseling. We would advise looking for a nonprofit organization for getting advice. There are companies who are not nonprofits who will charge you to help you solve your credit card problems. The problem with that can be that it is going to cost more than it should. And if you go with a nonprofit, they're not going to charge you. They're going to give you advice, and hopefully that will be enough to get you on the road to paying off that debt. And finally, don't be afraid to pick up the phone and call the credit card company and ask them if they can help you, if they have some advice, if they can spread out the payments a little bit. See what kind of assistance they can give you. If you're really struggling and are not sure what to do. They want a good customer. They don't want one that can't pay off the money. Okay, so keep that framework in mind. Okay, what don't you do? Do not spend any more money on your card. You're having trouble paying off the debt you have. Don't add more debt, okay? Do not get another card. That does not help. All that does is add to the amount of debt that you have. So another card is just going to make life even more complicated. It's not the time to get a different card. And very importantly, we've talked about this a little bit. Think about the difference between wanting something and needing something. This really gets back to, what's your plan for creating savings? Because when you create some savings, that's that extra money that you can use to pay down the debt and get things back under your control. Okay, so that's sort of a high level of how to deal with these big balances. And I'll pause to see if anybody has any particular questions, or we can move on to the last piece of this presentation.
We aren't getting any questions, Barb, so do you want to just keep going?
Yes, so let's move on. Anne?
All right, so to summarize what we learned today, in chapter 2, we looked at credit card statements. We looked at that in some detail, so you know everything that is included on your statement and what are the important pieces. We looked at credit card management. This is so important. If you manage your card well, it's a great asset. If you manage it badly, it can really give you a lot of headaches, put you in horrible debt, and just make your life miserable. Okay, so it's really important that you listen to what we said and understand how to manage your card well. We explained to you what credit scores and credit reports are, why they're important, and also where you get them from. Okay, so certainly don't be afraid to go to the sources that we suggested, because you are entitled to one from each of those companies that we listed at least once a year, and that's free. Okay. We showed you or gave you some tips on how to avoid fees and interest. Okay, both of those can so quickly add up to a lot of money, so you really need to avoid those. Would anyone like to tell me actually what's one way that you can avoid fees and interest? How do you manage your card so you don't pay fees or interest? What's important to do? Anyone?
Pay bill on time.
Absolutely. Pay it on time. Yes. And anyone else for anything else? What else should you do? One more thing. If possible, you should you pay some of the balance, or should you pay the whole balance if you can?
You can pay a little if you can pay a little more than the monthly, say that you can pay the full if possible.
Right, absolutely. So if possible, you pay the whole amount, right? You don't even think about it. If you have the money, you pay the whole amount. If that's not possible, you pay at least the minimum balance, and preferably more than that. So as Bob said, even if you can only pay $1 more than that, you pay it, okay? Because it all helps. So yes, you avoid fees and interest by paying on time and paying the balance in full or as much as you can. And then we talked a little bit about credit card balances and about what to do if you end up with a balance and you get yourself in trouble and can't easily pay it off. Okay, so what I'm going to do on the next slide then is I'm going to give you a little scenario or a little story like we had last week. And then I'll ask you for your opinions. Okay, so this week's story is about Layla. So Layla works very hard. She's had her credit card for 2 years. She actually is a little bit afraid to use it too much. She knows all about the big balance that she mustn't get, right? So she's afraid to use it very much. She does use it sometimes, particularly if she needs some new clothes. She has a good job and she does sometimes need some nice new clothes. And she loves buying things for her family, especially for her mother or her sister, okay? Sometimes even when it's not their birthday, she buys them things. But she doesn't use her card a lot. It's never a very great deal of money. And she has always paid the balance in full each month. So in other words, she has managed her card really well. Then, what happens? So recently she got some new friends and they like to go out to eat at the weekend. They also like to go shopping. They buy clothes, they get their hair done, they get their nails done. Layla really likes to go out with them. They're very nice friends and she has a very nice weekend with them. But, well, of course, what does that mean? She's spending more than usual. She started using her credit card more. Unfortunately, now she gets her credit card statement this month and it shows a big balance. She can't pay it all off this month. First time ever, she cannot pay the whole balance. She gets really upset. She actually cuts up her credit card so that she can't use it again. And she tells all her friends that she just can't go out with them again. She just can't afford it. Okay, so that's Layla's story. And what I want to ask you all is, first, how could she have managed better? What could she have done to avoid getting this really big balance all of a sudden? What different thing could she have done that would have helped her and kept her credit card balance much smaller? So what could she have done? Anyone? She went out with her friends. They ate out, they got their hair done, their nails done, they bought clothes. So Layla did the same thing. Did she have to do the same thing as them? What do you think?
She would not have spent with her friends and clothes.
Yeah. Yes, right. Just because you go out with your friends and they buy clothes, do you have to buy clothes? I don't think so. Just because they went out and they had some kind of expensive dinner, could you have eaten something that was a bit cheaper? Could you have just had the salad, say, right? Might have cost you less. So yeah, and she could have gone with them and maybe met them after they got their hair and nails done. She needn't have got that done, right? So she didn't actually have to do the same thing as them or spend as much as them, right? Now, when she got the big bill, remember, she cut it up so she couldn't use the credit card again. And she said to her friends, I just can't go out with you again. Was that her best idea, or is there something else that she could have done? Even if she cuts up the credit card, she still has to pay the balance. Okay, the balance doesn't go away. So could she have done something else? Should she have cut up her credit card?
I think no.
I think not. So why not? What else could she have done?
She need to get more responsibilities.
Yes. If she cuts it up, how is she going to learn responsibility? That's an excellent point. So when she got the big bill, I think she should have stopped using the credit card, right? If it gets big enough, you stop using it until you have figured out how you're going to pay it off, and you've brought that balance down a lot. But she didn't have to cut it up, right? She could have just put it in a drawer and said, I'm not going to take it out again for at least 2 months until I am really sure that I can pay off this balance, right? She should have made a plan. That was the more important thing. So no point in panicking. You have to make a plan. And as Bob said, you can figure the plan out for yourself by figuring out how much you can pay off as soon as possible, or you can talk to the credit card company or a credit counselor. Yeah, she would have been better off doing that, right? And she's never going to learn responsibility if she just cuts up the card. But if she keeps the card and starts using it again, maybe in 2 or 3 months, then perhaps she'll learn how to use it more wisely. Okay. And should she have just told her friends she couldn't go out with them again? Or could she have done something different with that as well?
Sometimes I like to do things with my friends that don't cost things. Like I go for a walk with them, or we go to some place that's not very expensive.
Good point, Deb. Yes. Does everyone else think that's a good idea? You could do something that either costs hardly anything, or you do something. There are a lot of free things, and even around the holidays, there are a lot of things that you can do or go and see that are actually free. Or, you know, instead of going out to eat, you can have a picnic in the park. That costs you something, but hardly anything, right? So she maybe could have done some different things. Does everybody think that's a good idea?
Yeah, I think this is a good idea.
Yeah.
Because I have many kind of thing you can do. You can hiking, or you only go to browsing the mall. You cannot buy some expensive things.
Yes, absolutely. You can do something that doesn't cost you much money, or that doesn't cost you any money. And maybe this will also help her friends to spend less, right? We didn't ever find out if her friends can really afford all this expensive things that they're paying for. So she can maybe help her friends save money too. So, you know, a benefit for everybody, right?
Yes.
Yes, absolutely. So the key thing is she has to think how she can now make a good plan. And then she has to decide how she's going to manage her credit card better. Okay, so it's all about good management. Okay, so let's go on to the last slide. I hope you will learn something from that. And I hope you will learn something from what we shared with you today. So does anybody have any final questions or comments? And if not, then I'll just turn it back to Ralph.
Okay, one question at a time, please. I hope everybody enjoyed today's presentation.